Hi, my name is Mace Kokendorfer. I am a certified reverse mortgage professional here at Colorado Reverse Mortgage. You're watching our ongoing series, Helping You Move Forward in Reverse, where I'll either be discussing a topic of my choosing or will answer questions that come across my desk. Today, I'm helping Lucy, who is addressing some financial concerns on behalf of her parents. She writes, Mace, my mom and dad are both in their 80s. Dad gets $1,900 a month from Social Security. Mom gets almost $1,000. So together they receive $2,900 per month from Social Security. There's no other income and no real savings worth mentioning. They live in the same home today that I was raised in as a child, and they'll live there for the rest of their lives. It's sad to watch, but Dad's mental and physical health is deteriorating while Mom continues to be sharp and active for her age. Longevity runs through her bloodline. I don't want to sound too gloomy, but it is a realistic assumption that Mom will outlive Dad by many years. My brother and I are concerned that once Dad passes, Mom can't get by on her $1,000 Social Security monthly income. It's important to all of us that she continues to live in the home with all of her memories. It's an older home, a little rough around the edges, and it's worth maybe $350,000. The bones of the house are still good, but it was last remodeled in the early 1970s. The home is owned free and clear, and my brother and I don't care about inheriting it. What kind of monthly income will a reverse mortgage provide her? Sincerely, Lucy A. Lucy, you gave me a lot of good information, and in return I can give you quite a bit back. You mentioned that your mom, though, was in her 80s, but you did not give me her exact date of birth. Since reverse mortgage proceeds are determined by a person's date of birth, I'll assume that she's 85 years old. That said, I may be a little high, I may be a little low on my figures, but since we don't really have an appraisal with the exact value of the home, well, we can really only take an educated guess at this point anyway. So I appreciate your understanding and allowing me a little bit of flexibility on this point. We'll figure out the exact numbers, of course, in the future if this works for you. Now, the loss of a spouse or a parent is traumatic, emotional, and there are certainly going to be other priorities after Dad's passing. Too often folks don't come to me until they're in crisis mode. So I totally want to give you and your family a pat on the back for addressing this issue of finance head on and not ignoring the inevitable. To reiterate your concern, you mentioned that Mom's Social Security income was almost $1,000 and Dad's was $1,900, and that once Dad passes, Mom couldn't get by on her $1,000 a month Social Security income. But before we jump into my reverse mortgage analysis and opinions, I'd like to give you a bit of good news and correct your assumption. When your father dies, your mother will stop taking her $1,000 Social Security income and will assume your father's $1,900 monthly distribution for the remainder of her life. Okay, to be clear, Mom's income is already going to be $900 higher per month than what you had mentioned in the letter. So I'm sure the folks at Social Security would have corrected you at some point in the future, but it's best that you know this now, if for no other reason that you all rest easy at night. With this new information, maybe a reverse mortgage is no longer even needed. If that's the case, this video is over, and I'm happy to have been the bearer of good news. Now, because this information may have solved your concerns, it does make for a rather short video. So I'd like to go down the path a bit further and expand on a few things to broaden your knowledge and others who are watching this video. I'll answer your initial question about the reverse mortgage monthly distribution. Again, we're going to assume your mother's age is 85 years old and that the home is going to appraise at $350,000. The monthly tenure income would be $1,589. But this is a simple answer, and depending on the actual monthly need, we can either adjust that figure higher or we can adjust that figure lower. The reverse mortgage distribution can be modified any time after closing and as often as it's needed. And to the best of my knowledge, no other financial product offers this flexibility. So to use this as an example, let's pretend that 6 months after Dad's passing, because less food, household goods, utilities, medications are being used, your mom realizes that she can turn down the volume on the tenure amount of $1,589 because all that's really needed is an extra $800. That's great. Now, the $789 difference is not lost, but it's converted into a line of credit. This is going to give her access to a large chunk of money if she were ever to need it. On the other hand, perhaps she needs to turn up the volume on the monthly disbursement because now she needs to hire somebody to maintain the landscaping, and perhaps her prescription medicine becomes more expensive over time. So we can bump up the monthly reverse mortgage to, let's say, I don't know, $2,000. That's fine also. Just know, though, that by increasing the monthly tenure or increasing the monthly income above the tenure amount, figure I gave earlier, it puts a term or a limitation on how long these reverse mortgage proceeds are going to last. A quick story, a little sidebar here, just to show or share an example. 5 or so years ago, I had a feisty and seemingly healthy client share with me that she had terminal cancer. Extra funds were wanted beyond what a tenure figure would provide. Remember, tenure means for life. So whether she lived 18 months or whether she lived 22 years, tenure means forever, at least from the client's perspective. Now, the doctor had only given her 18 months to live. So my client did want the reverse mortgage funds to last those 18 months, but to be pragmatic and perhaps a bit optimistic, I had suggested that, well, we maybe spread the amount not over 18 months, but over 24 months, over 2 years. Now, fortunately, she did see the logic to my recommendation because she didn't want to be in month 19 and have all of her money used up. But a few years later, I was informed, not surprised, by a mutual friend that she had beaten the doctor's 18-month time frame by several months. Ultimately, of course, I was sorry that the spunky lady had passed, but was glad that she chose to be prudent with her disbursement choices, and I hope she continued to live those last 22 months with her life with vigor and wonder. But the point of this is just to share with you a good reason perhaps that we not choose a tenure type of option, but that we condense it down to a shorter period of time. Okay, moving on. Given what you shared with me in your letter, and knowing that your mom's income is already going to be $900 higher than what you had expected, I don't think I'd recommend, at least at this time, that we set her up with any monthly income. She's already got an extra $900. Now, 80% of the adult population, this figure just astounds me, but 80% of the adult population have less than $9,000 in savings. And in your letter, you indicated that Mom and Dad had no real savings worth mentioning. Now, that may mean that they have $0. That may mean that they have $10,000. In either case, there really isn't much of a cushion for them to rely on in case of an emergency or other need occurs. However, the problem with the home as the only sizable real asset is that it is not a liquid asset. A reverse mortgage makes liquid a portion of an otherwise non-liquid asset. I'm going to repeat that. The reverse mortgage makes liquid a percentage of an otherwise non-liquid asset. So what I'd recommend is establishing the reverse mortgage sooner rather than later, but that we're leaving the amount mostly untouched in the form of this line of credit. You see, money that is drawn out of the line of credit is charged interest, and the unused portion of the line of credit will actually appreciate over time. So today, using today's rates, today the line of credit would be growing to your mother's and father's benefit at a rate greater than 4.7%. What I like about this structure is that she's not needlessly drawing money out that probably isn't going to be needed initially anyway. But if or when she does have a large expense, then she'd have access to well over $200,000. And remember, the unused line of credit is guaranteed to grow. Doing some quick math, the initial growth that just during the first year is about $10,000. So later, if the car needs a new transmission, or if she finally decides to get rid of that green shag carpet, she can draw out of the line of credit whatever amount is needed at that time. Now, on the other hand, if she did determine that there was a need for a little extra cash each month, she can always request to have an automatic deposit, a certain amount, knowing that she can either increase or decrease that amount later as her circumstances do change. Boy, we just went from a short video to a long video. I hope your eyes didn't glaze over too much. If I wasn't clear on something, or if you want more detail, just give me a holler and I will keep talking and I will keep teaching until your eyes do glaze over. I'm probably not a whole lot of fun at parties, but I really enjoy educating folks about the finer points of what I do in the reverse mortgage industry. Please remember, a reverse mortgage is not the right solution for everyone or for every situation. If I can share other options or other strategies, I'll always do so. I do welcome questions and enjoy helping seniors and their families in their efforts to understanding, and I will always help them move forward in reverse. Until next time, take care. Thank you.